Hi guys, good morning. It's 23rd of October, just gone 8:30 here in London. Hope everyone is as happy as I am today. I've got my Arsenal back. 3-1 win at home to Leicester, playing some very, very good football on Wenger's birthday as well. So all is good in London. London is red, but so is the rest of the world at the moment. Equities down under a bit of pressure this morning. S&P, you can see here, coming down near those lows. The Dow and Nasdaq following suit, but also over in Asia as well. You can see here the top left chart, the Nikkei under pressure. The Shanghai comp as well, and the DAX gapping lower with Euro stocks also sort of following suit there. So reasons for this, well, if we go back just to have a look at the S&P and the US equities in general, after the cash open, we found a bit of support before pushing higher. It wasn't really until the morning that we actually started to come back down, and really led by Asian equities was this move. Over the weekend, obviously, we had the comments out of China, which really helped to sort of boost the Shanghai comp. You can see here the best day for 3 years. We pushed high. This is my top right chart here. Really pushed on, and we've pretty much recovered all of that gain now. Just finding a bit of support pretty much where we went higher overnight yesterday. So with the policy changes, the income tax cut worth supposedly 1% of GDP, business tax cuts, additional funding for local government, all these positive stories pushing price higher, albeit for it to come down in early trade today. Just the sentiment in global markets still remains uncertain. Effectively that can, what you narrow down equity markets to sort of move off the confidence in the markets. And when there's that uncertainty, you have these risks obviously surrounding Italy, the Saudi Arabia situation, Brexit can even creep into that as well. The uncertainty of this no deal and deadlines getting pushed back and back. You've got the Trump elections. We'll come on to some of his comments out overnight, just the unpredictable nature of Trump and what he can do with the midterms coming up. So all these sort of factors weigh in on equities overnight, despite the positive lead we had to begin the week over in China. So you can see that really strong push, all completely undone now, and just albeit it's having a bit of a respite now. I wouldn't necessarily go in aggressively short here. I'd prefer to perhaps wait to see how the markets now digest this, that we've got sort of the European markets in full swing. If we have a look at the reaction from this morning, I think quite interestingly as well, you've had gold push higher. The dollar actually did strengthen during these moves. It seems as though gold is now a safe haven again, maybe temporarily, but pushing higher here. Quite aggressively. I see a couple of people in the chat took this trade on from the long on R1, and you can see since then it's continued to push higher, and we're now at levels, if we mark it up, pretty much not far away from the high that we had back on the 15th, which would also be the high of the month. So gold catching a bid for the first sort of time off a sort of risk off move in a while. You can also see that follow through there. This is dollar yen, so the yen strengthening here to the downside. So money sort of flying into your sort of safer haven markets. So unusually for now, gold is sort of pushing higher, even though in previous times it was moving more off the sort of the strength or weakness of the dollar. Silver following suit as well. However, oil under pressure, probably from that sort of dollar sort of strength that we had. The currency pairs, however, over the last, the major currency pairs, I say euro and pound, over the last sort of 15-20 minutes have just started to recover a bit and looking to sort of push on here. No real sort of headline out this morning, so I'll just be keeping an eye on these highs that we have sort of trading around here in euro and pound, actually not too far away from the pivot. Yesterday for both of those pairs, you can see the pound sort of led proceedings, having broken through all sort of morning into the afternoon before trading around the S2 for quite some period of time before just breaking out this morning. The euro as well playing a bit of catch up, having broken through. Theresa May did have her speech yesterday, although nothing really really doing from that. So more sort of focusing here on these pairs. If we were to retrace, I think the pivot looks quite good. The euro as well, if we were to get up to around that area, you would expect quite a bit of resistance. Just on the euro, considering we're on it, I was sending out the sort of the strategy, the weekly strategy that we do here at Amplify, and one of the trades that looks to me to be quite interesting, it would be if we were to break this sort of trend line that we've got forming here, a breakthrough of that, and I feel down to sort of 113 low of the year could come quite quickly. So more a trade to sort of wait and see for those markets in equities this morning, but also for this euro, I feel as well. If we can break lower through really the low that we've got here on the month as well, and sort of close below, then it could be a good opportunity to go short. Having a look at other stories from overnight, so I mentioned Trump was in the headlines again. Let me just drag this over into the chart. One sec. So yeah, Trump promises a new tax cut vote after the midterms. That's news to Congress. So they did kind of catch people off guard with this when they were interviewed. They kind of just had to go along with what Trump had said, but promising a 10% cut for the middle sort of income tax. So whether that can be passed through or not remains to be seen, but this would obviously normally, you would suggest, boost equity markets and sort of global confidence, but the overriding sort of risk fears at the moment driving markets, and you can see that from this morning. That's really what is the main focus. And going back to the sort of the China situation, you can see this chart here, and let me just move my camera just out the way a tiny bit. You can see yesterday was the sort of the most volatile day, highest since March 2016 for the Shanghai Comp. More volatile, in fact, than back in sort of February time when the S&P 500 was coming down. You can see that purple line there. So yesterday, volatility in the markets picking up. It does, feel a bit more like a correction rather than perhaps a long-lasting move for now. Tech in the S&P. And if you look at your NASDAQ chart, we'll go and look at that in a moment, you can see there's sort of more resilient to the push down sort of from the cash open yesterday. You can see tech sort of holding up in the green for this chart here, looking at the 500 companies or 505 companies in the S&P. So I feel, yeah, okay, the move might be justified, and the journos could put their reasons behind it. Sentiment obviously isn't great. We listed those sort of factors earlier: Italy, Saudi, Brexit, Trump, midterms. But it remains to be seen. I think there's still some factors this week and next week for the US with earnings coming out that could prove to be a good buying opportunity. So just having a look at that NASDAQ yesterday, you can see sort of on that cash open, while the Dow and S&P were making their new lows, we had the bigger recovery in the NASDAQ and actually pushed on to make a sort of a new high above that R1, whereas you can see the S&P struggled to do so in its recovery. The Dow similar as well. So earnings out this week, Wednesday and Thursday will be important, and like so Wednesday and Thursday next week as well. So we'll come on to sort of the earnings for today in the calendar shortly. A couple of sort of key ones for the Dow component as well. But just something to bear in mind. Yes, we have come down quite strongly in Asia today, but if we have a look here just at the S&P, it's not the biggest move to the downside, and we have had a tiny bit of a recovery now. Looking at more sort of technically, where would be sort of the point where you could consider going long? Well, if we look at the NASDAQ for starters, I think you would really want to see that previous low of the day break, which was also the low following the cash open yesterday. So from a technical point of view, push and break above this high would be, well, in my view, would be, okay, sentiment is improving now. Yes, we had a bit of a correction today, but that's pushed behind us. That holds, and sure, yeah, we can continue to come down, and negative comments that also come out in the market could and should lead to more downside. I think it will be quite prudent as well if China come out and sort of back their weekend comments up as well, in order to sort of boost the market. You know, it was a very big push that we saw Monday morning, and it seems to all be in vain now. But just be something to bear in mind. Ears open to sort of to listen for any potential comments that do come out. Similar sort of idea for the Dow in terms of that sort of low of the day now, where we found really good support, then resistance, a break above that, and the S1 could sort of lead to a change in sentiment. Probably getting a trend line on as well is quite key here. You know, let the market tell you what's going to happen. As long as these sort of current previous lows of the day hold, then sure, look to the opportunity to sell. But if we start pushing above these resistance points, then it does just feel like buy the dip is still in play. I wouldn't call it panic time yet. You know, if you take us back to early February, late January, when the markets in the US really started coming down, it felt a bit more of a panic situation than it does now. We've got the earnings to come out, which we saw could lead to really positive, or you know, on the same side, negative reactions. But you know, I feel short-term volatility to the downside, sure, due to the uncertainty. But as these risks perhaps unwind, we may start to see a bit of a recovery. But it would definitely be a case of letting the market tell me, rather than just sort of going in now and trying to beat the market, if you like. Just for the S&P, just to clarify this sort of area I'd be looking at, same for the Dow, same for the Nasdaq. That previous low that we had in early Asian market trade was also then the resistance point. Again, getting a bit of a trend line on as well, so very correlated, those markets now. The S1, if that breaks, you know, this would be a break of that trend, and it's still not a bad little opportunity to get long back to that area as well. If we have a look at the DAX, so you can see my bottom left chart, I'm just going to make this a bit bigger. You can see gap lower on the open, so I'd be looking to see if we can effectively look to sort of close that gap there on the sort of the CFD we got traded here, maybe for a key to see if equities can recover. But as long as these highs or resistance levels hold in US equities, I don't see why we can't continue to come down. Times of interest today, so I mentioned, you know, you want to be wary of sort of any comments that come out of China, perhaps looking to back their sort of stimulus boosting comments from the weekend. But scheduled releases, if we have a look here, it's going to drag the calendar into picture. It's a quiet day, and obviously not as quiet as yesterday scheduled wise. I mean, if we go through the morning, it's very, very limited in terms of points that are coming out. I think the main highlight of the morning scheduled wise would be Haldane speaking at 11:30, so one of the hawkish Bank of England members. I'd just be listening out for that, not really expecting too much, unless they were, you know, a bit more, you know, dovish than expected. Going into the afternoon, obviously you've got your opens at normal times, which can of course provide some volatility, and it is actually on 2:30 where we've got a speaker as well, Fed's Kashkari, albeit a non-voter, speaking before we come into sort of the data releases, the data to keep an eye on. 3 o'clock out of the US, you've got the Richmond Fed, and you've also got consumer confidence out in the EU. You can see last reading was a negative reading, -2.9, whereas in the US we had a multi-year high. So there's that clear shift there between sort of the two countries, if you like. 3 o'clock, mentioned that's the data. If we go into the afternoon, one to sort of bear in mind for cable traders, we had the 11:30, or would have had then the 11:30 Haldane, but you've also got Carney speaking at 4:20 on machine learning, but so not necessarily going to have too many comments. I'm sure he'll have a couple of questions, Brexit related, or sort of Bank of England projections going forward before the QIR. So we'd be listening out for that. Earnings wise, mentioned you've got Verizon there, you've got McDonald's, you've got 3M. Some of these companies obviously can move the market for the Dow Jones, along with Caterpillar as well, to be aware of. In summary of the markets from last night, if I just bring back into picture the the Asian equities, you can see they're still just finding a bit of support. I feel right now markets are sort of waiting. They're on edge following this move. There hasn't really been a continuation from the sort of volume we see increasing at 8 o'clock here in Europe and in London in particular. So for me, going off that, I wouldn't be too surprised to see recovery. Would I be buying in right now? No, I'd want to see, say for the S&P, a break above those levels that I mentioned. Even this trend line going, I think could be a half decent opportunity. If they hold, then sure, sentiment remains to the downside. Looking elsewhere, quite interesting, as I mentioned earlier, gold becoming a safe haven, again moving off that money into sort of those safer sort of haven products. The Swiss franc catching a bit as well. T-notes actually pushing higher, so yields coming down, which might be a bit of a relief for equities as well. But just coming up to that sort of high of the week there. So we're keeping an eye on gold, how that trades. Oil, data-wise, forgot to mention, but you've got the API, its usual sort of 9:30 slot. We've had, for those that do trade the API, really quite big contrast in the last couple of sort of readings that have come out in the weeks. And still with sort of refinery maintenance season, you are expected to see builds. So any sort of drawdown like we saw last week would move the market, but until we really get a big draw on your sort of DOE release on the Wednesday, I wouldn't really expect much move to the upside just yet. Where does oil trade? I can again put it into the strategy that we sent out. I think really once we had broken this quite key sort of technical pattern last Wednesday. When was the 17th? Yes, on the Wednesday. Yes, you had that breakthrough, then you had the DOE that came out and the surprise, the difference to the APIs that you can see where my mouse is now. Since then it's sort of gone into this range again. Probably worth getting in these new trend lines on as well. Quite clear double bottom as well. So interesting to see what happens here for oil. I think for the short term I favour the downside for a further sort of push down, and we can start to target the levels that we had back in the beginning to middle of September. So 67.75 on the futures before perhaps going down to mid 66.5 that we saw the low of September. So favouring the downside. Currency wise, I mentioned the pound looks quite interesting at the pivot, hasn't quite made its way there now. We'll come on to sort of how the dollar index is trading in a moment. The euro, I mentioned the pivot's quite good as well, but just briefly finding a bit of resistance there as well. Aussie dollar has found resistance on the high from last night and the previous low of the morning. So not a bad sort of range trade, continuation of this dollar strength from now. Probably got a test of this trend line as well come into play. So quite a key area for the Aussie dollar as we're trading. Let me just bring up the dollar index on how we are trading. Huh? Oh. The dollar index here, you can see quite sideways at the moment. So in that range, hence why we've sort of seen the euro and the pound push higher with the Aussie dollar. So we're looking for a continuation higher if we are to start to see these markets reverse. And it does feel like they're just finding a bit of resistance, albeit now. I think I just needed to transition the charts there, so I'll just go over the S&P levels again here, just with those trend lines. I think if we were to break the S1 and that trend line here, then you might get a bit of a respite. But as long as those levels hold, then sure, sentiment to the downside can absolutely continue. Comments out of China will be ones to be aware of. Are they going to back their comments from over the weekend? Italy situation, how that progresses, the dramas in Saudi as well, any Brexit related comments, and of course any further on these Trump sort of new tax cuts and the midterms. I think while those factors remain present, then there's going to be that uncertainty. I just think if there was to be more panic, we'd have seen a bigger move come in following this sort of London and European Open. But quite interestingly, gold, again, the safe haven. Any questions, as usual, guys, please do get them in the chat. Going to be a relatively quiet morning where I would let the the charts tell you what is going on. Trade what you see, not necessarily what you think. Obviously got their speaker, Haldane at 11:30, the main sort of thing to be aware of scheduled wise. But if anything's to sort of go over the last few weeks, it's more the unscheduled releases that really move markets. I think it kicks on tomorrow. You have the Bank of Canada rate decision, which is basically 97% priced in, so potentially see a reaction there depending on how hawkish or dovish they are in the press conference. They've got the main earnings as well out after close tomorrow and Thursday as well, which could come to the rescue for the US equities for now as well. So hope you all have a good trading day. Catch you in the chat and obviously be on throughout the morning as well.